In this video, guys, I want to talk about what are you really afraid of in trading. Stay tuned. Hey traders, warm welcome to you. All right, so I wanted to cover this topic because I think that fear is something that crops up often in trading. And in a recent conversation I had with Steve Ward, we talked about fear, and he kind of said something like, well, is it really fear? And there's a lot more in-depth answers to that, but something that really kind of stuck in my mind was, is that really fear? Is that really fear? Like fear is, oh God, I'm gonna get shot, or oh, I am gonna die, or that's genuine fear. I'm gonna get run over, or whatever it may be. But is it really fear? And I was thinking, that's an interesting thing. But many traders do label it as fear, which is fine. Let's go with that for now. And that's exactly what he said is like, hey, fine, let's label it as fear for now. Let's move forward and talk about how we manage this type of stuff. But something I thought about after that conversation was, what are people afraid of in trading? And from my own trading, I audit my own trading. What am I frightened of happening? What do I least like to happen? And fear, yes, maybe a bit of a strong word for it, but what is the thing that I don't want to happen the most is probably a good way of looking at it. And there's often it's quite illuminating. You go, well, actually, I don't want to. This wouldn't be very good. That wouldn't be very good. If I gave back my quarter's profits, I'd be pretty unhappy about that. And kind of doing that audit and then going, okay, well, how is your trading affected by that? In other words, yes, you might say, hey, I don't want to give back those quarters' profit. I hate to give back all Q3's profit in Q4. That would make you feel awful. So are you trading because of, are you adjusting the way you trade because of that? So if there's a big trade setting up that is a grade A trade, and let's say you kind of Q4's been flat for you, let's just say, are you going to swing for it because you're worried about Q3 and you're worried about putting up the number you want on the end of the year? Or are you not because you want to, this is kind of interesting. So that was just something that kind of by the by, but things I think that traders are afraid of, and going back and looking at some of my journals actually was quite an interesting task recently. Not task, it was an interesting thing to do. I recently looked back in some of the journals back 2002 as this interesting thing, and it said, what was it? Oh, I'm really happy I made £1,000 today. And then the next entry was, I lost £2,000. That just pretty much sums the first couple of years for me. Anyway, what are you afraid of? Number one, missing a trade. This is something that you and let's kind of dissect these and push them to one side. Missing a trade. The reason I think we are afraid of this, and let's use the word, the fear for now, or define as fear, is that it's not necessarily because we miss it per se. It's more like the damage it potentially does to our value as a trade. Like, hey, I saw that trade and I knew it was going to do that and I was going to take it, but I didn't do it and I would have made money. It's the shoulda, woulda, coulda thing, and not only shoulda, woulda, coulda, but I nearly did it. I nearly bought, and for some reason as human beings we have that regret, and we don't want to feel that regret. That's the issue. It's, hey, I don't want to feel regret after I take this trade, or if I don't take this trade and it just rockets off and I would have made a lot of money, I regret that I thought about taking the trade. An easy way to combat that, I found, is to do this. Say, hey, this is the trade I did. Am I going to take it or not? And literally objectively making the decision with authority, stepping up as a trader and saying, no, I do not want to take this trade because of this, this, and this, whatever they may be. Or, yes, I do want to take this trade because of this, this, and this, and then structure the trade from there. But let's imagine you say no. Then, when you're making that decision with authority and conviction, you say, hey, with the information I've got at the time, I'm not deciding to take this trade because of this variable, this variable, this variable. Done, you log it, you move on. Now, if that trade then goes, it would have gone in your favor, you could be far more at peace and say, yes, I missed a trade, but I actively made the decision not to take the trade, and this is why. Now, if that decision-making process needs some work, then that's fine, you can work on that. But you can't beat yourself up too much for missing it because you've consciously chosen not to take it. I think that's a much better way of approaching it. Hey, look at this. Do I want to take this trade? No, this is why. Okay, next. Then you haven't got that feeling of regret because you never were going to take it. All you've got to do is work on the way you make your decision. It's not like, oh, I nearly did it, but I kind of talk myself out of it. So no, I made a conscious decision with authority not to take the trade. That helps loads. All right, losing on a trade. What are we worried about losing on a trade? We're worried that it's, okay, maybe the money is not always the big thing for many traders, especially in the early days. Okay, it's just another loss. And that's because we're staking the loss to our identity as a trader. We think that we don't have any value. We're like, oh, I'm losing again. We could talk about the connotations of loss, or calling it loss, all this stuff another time. But I think the big thing is to step back and put your worth on your work ethic. So stake your identity as a trader in the early days on the work you're doing, the pre-market prep you're doing, the sticking to your rules. That stuff is where you should is the win. That's the win, not the trade. You can say win-loss on the trade, but that's not the way to do it. The way to say is, did I win the day because I stuck to my rules and I stuck to the trading plan? That's a win, because you can control that. You can't control the market. And especially in your early days as a trader, the market is just going to just wrong foot you. That's just the way it is, because you haven't got the experience of seeing things and go, I've seen this before, man. I know what you're up to. So stake loss, we'll look at loss in a different way. Is like, it's sticking to the program and sticking to the thesis and sticking to what I said I was going to do in my plan. So giving back the day's profit, and this is again it's probably very, very similar to this losing on a trade. It's the identity of, hey, why does the day matter so much to you? It's just a time-stamped point in time where you're looking at your P&L. Why could that not be every hour? Why is that not every week? Just because it's a day and everyone says it and the market happens to open and close, we think that's so important. It's not important. You could lose, and then have a monster last couple of days and just make your month. So looking at that is just a bit of fallacy, and it's just something that we're conditioned to do as traders, especially day traders. How much should I do today? How much should I do that? And it's not really it's not really indicative of your performance. Yes, it can be, but giving it back, it's like, how much do you want that green? It's like that green day is so valuable, so you need to readjust and recalibrate what's important. What's important is how much you're making on your winning trades. Are you sticking to your rules? Are you capping the risk? Are you doing this? That's way more important than just an arbitrary timestamp of ding, that's a day, and I want to see if I've made money in that chunk of time. It's far better to kind of stretch it out and go, hey, how am I improving? How am I doing this? Just elongate that. So giving back the day's profit is something you can work on. I'm going to come back to number 4 in a moment. Number 5, giving back unrealized gains. I think that's, if we're in a trade, it's going our way, you're up a couple of grand, a couple of $100, whatever it is, whatever you're playing at, doesn't matter. But at that point, you're like, you almost like, oh, I can't lose by taking this. You convince yourself, because if I take this 2 grand and it goes up further, I'm going to be like, oh, well, never mind. But if I don't and it comes back, I'm going to feel awful. So you create this asymmetric deal in your mind that kind of pushes you to take the trade off. You're up $2,000. You're like, yeah, but I still feel great 2,000, I still feel great at 3, I feel great at 4, but I feel awful at 0. So you've twisted this decision to me, this awful decision you can't win. And in reality, the correct answer is to go, what's the trade telling me? Have I decided, should I be holding this trade? How should I be managing the trade? It's back to that process-focused approach and not worrying again about the timestamp of, hey, that's just one trade. There just happens to be a point in time where that trade was closed. Your equity curve is fluid. It's up and down. It's dynamic. It's constantly moving based on trade you take, points of time, and you're just going, dunk, looking at that point in time on that trade, dunk, that point in time in that trade. It's not really the way to look at it. It's to step back a little bit and look at the bigger the picture of how it's all flowing. So giving back unrealized gains, that's something to kind of look at and go, well, it doesn't matter. It doesn't matter. I could just, if I haven't got my process sorted, giving this 2 grand back's almost irrelevant, because I could end up losing 5 grand on something stupid and breaking a rule. So why am I even bothered about that? I'm just trying to feel good. Let me focus on what's important and focus on holding the trade if that's the right thing to do. We focus on the plan, the process. And blowing up is something that we can't control, or we can control, should I say. We can't control giving back unrealized gains. We can't control giving back day's profit. We can't control losing. We can't control missing. To a certain extent, we could probably lock in, but then we're kind of never going to grow, right? Where do we lock in? But blowing up, we can control. And sometimes I think traders, we fear this if we're not confident in our ability to stick to the rules and be disciplined. And that's just something you ultimately have to work on and improve. You can't go through the day worrying about blowing up, or the week and saying, hey, you know what, might do damage to my account. You have to, above all else, you have to trust yourself to pull the plug when you hit that maximum daily loss limit. That is absolutely essential from a day trader's perspective. If it's $500, you must have that. Forget about anything else. Forget about your entries, forget about your stops, forget about running trades, forget about anything else. You must be able to stick to that daily loss limit, because if you don't, then not only will it damage you, and you're a landmine trader, video I did a while ago, quite popular, where you're walking through kind of a field and every so often you get through, but you're just waiting to blow up. That's what you don't want to be, and that sits in there. If you think you can't trust yourself, if you think at any point in time you could go crazy and end up punting massive size and doing damage, you will never take any substantial quality risks. You'll never push the throttle when things are working. You'll always be shy. You'll always be this, and you'll always fear the unknown. Like, oh God, today could be the day I blow up. And that's a horrible place to be. So you really got to address that. And the final thing is this: putting the effort in and still losing. So what I mean by this is, many times I think as human beings we go, well, we always want to leave a little bit, because if we fail, we can go, well, if I didn't do that, I could have made it if I'd have done that. If I'd have come up with a decent trading plan and a routine and structure, and kind of, got into mentorship and joined a community, or did this or did that, and really put some time in each day, or whatever it may be, I could have done it, but I didn't do that, so I didn't. So I think as humans, we often leave a little bit there because we're frightened. And this is probably, like, whoa, really? Because when people say, oh, you're afraid of failure, most people go, no, I'm afraid of failure, I'm afraid all the time. But actually, I think deep down, we're like, okay, what happens if I put everything into it and it doesn't work? Then I'm like, oh, that's pretty hard to take, right? You put everything, you threw the kitchen sink at it, you put all the effort in, you spent all this money, you did this, you did that, and it still didn't work. There's no excuse there apart from owning the failure and going, hey, I tried everything I could, it didn't work. But many of us, I think, go, actually, if I fail, I can say, well, I didn't do everything. You know what, I didn't. If I'd have done that, I probably would have made it, but I chose not to kind of do it. And we don't go all in because we feel like there's nothing left to try. And that's the other thing, is like, if it's not working for you, like, well, I could still try that, I could still try that, I could still try that. And we end up going, and then we leave it. So make sure you do everything as much in your power as you can to make it work. That is, what are you afraid of? Keep your risk managed. See you next one, guys. Bye-bye.